Hey, what's going on, my friends? It's your man, Adam Ace Spencer here with another growth portfolio update here in our M1 Finance account. We started this portfolio with only $100, and as you can see, our current value sits at $1,067.48. Over the past day, we are down 4.46%. Over the past week, we're down 8.66%. Over the past month, we're up 1.78%. Over the past quarter, we're down 14.83%. And 1 year, which is the same as all time, we are down 39.45%. As I mentioned, our current value currently sits at $1,067.48, where our gain is negative $407.34. And despite this being our growth portfolio, we have earned 4 cents in earned dividends. Now, you guys might be looking at this and you're like, man, we are getting killed. I'm never investing in growth portfolios, but hold your horses. This is why growth is so volatile, and why, a lot of people stay away from growth when it's when it's money that you're kind of relying on more than it being something that you potentially can lose a little or you don't need it anytime soon. Growth is very volatile, but in the long term, growth tends to, if you have the best growth companies, tends to make pretty good returns, or can make pretty good returns. Again, if you have good companies, if you bought Amazon or Tesla 10, 15 years ago, whatever, you would be doing pretty well today. And that's despite any recent volatility they've both experienced. Now, again, what we're trying to do with this growth portfolio is hope we can find those next Teslas or that next Amazon before they blow up to that point, and continue to accumulate a larger portfolio with owning as many of those shares as possible before it gets to that point where it runs and it rips and it more than doubles and quadruples and whatnot. So that's why we have this growth portfolio. You may have seen our dividend portfolio update, and it's doing much better than our growth portfolio. Again, it's because it has more value-based companies, companies that have been around for a long time and proven themselves as being able to withstand the turbulence and the volatility of the market, especially, with what's going on right now around the world. Now, when we look at our growth portfolio here and we see how things are going, you can see at the top of our list, we have ChargePoint, which ChargePoint is up 13.06%. And then we have CleanSpark, which is up 8.97%. But unfortunately, everyone else is in the red. Nvidia down 8.81%. Bakkt Holdings down 29.7%. SEMrush down 32.12%. Fuel Cell Energy down 32.85%. Palantir down 46.16%. Coinbase down 54.92%, and DraftKings down 61.4%. Now, as a whole, this portfolio can definitely be doing better. We're down, $407.34 from the total amount of money that we've contributed to this portfolio. Never fun, never, a good feeling when you see your portfolio is down. But again, remember, these are companies that we believe in will be, at the top of their industry that in their sector in another 5, 10, 15 years. So we're not worried about the volatility that they are currently experiencing. If anything, look at this as a great opportunity to buy more stocks of these companies that are down in your portfolio. And this again will allow you to accumulate more and more shares at a cheaper price before it rises and increases to where we believe they will be in years to come. So this is why growth investing, growth stocks can be tricky and not, it's not always recommended. Our dividend portfolio is doing much better. And, if you needed to rely on that money in the near future, well, at least, we're not down on that portfolio. We can grab that money. Whereas this portfolio, we are down quite a bit. So you don't want to sell at this point. That's when you want to buy. But if you needed this money, I get it. That's part of the reason why what I'm trying to do is get you guys into the pattern of just starting to invest with money you don't really need, or you're not going to notice as much. $25 being taken out of your savings or checking account on its own automatically without you doing it yourself. It's gonna, it's easier for that auto system, the autopilot, to kind of work for you and let it do its thing, because then you're not thinking about it. You don't really notice it. And all you got to do is come back to your portfolio and see how much money you have in here after 6 months or a year. We do these videos every weekend. I don't necessarily recommend checking your portfolio every weekend, but at the same time, these are all companies that I've chosen and handpicked myself, and maybe they have some big news that's coming out. Maybe DraftKings is going to be making some changes that aren't necessarily going to be good for us investors in the near term. Well, that might explain why the stock is down so much. But again, if they are near-term moves or actions that are going to help them for the long term, well, you shouldn't be worried. And it's only the day traders, the people that are buying in and out and selling in and out on a day-to-day basis, that should really be worried about these short-term changes that might negatively impact the stock price. But again, in the long run, those short-term changes that negatively impact the stock run, if anything, look at that as a gift, as a sale. I always call it a fire sale, in which you want to buy it as much as possible at those cheap prices, because again, in 5 years from now and 10 years from now, gambling may be legal across the whole country. If they are, and DraftKings continues to be at the forefront of the gambling industry, well, being that we are continue to accumulate more and more shares at these cheap prices, we might be in a pretty good position in another 5, 10, 15 years from now. So remember, it's a marathon, not a sprint. We're not worried and freaking out about the volatility and our portfolio being down. We just continue to contribute $25 every weekend so that we can have our money working for us in the long term. So I hope you guys found this video helpful. I do have a link down below to M1 Finance where you can start your own M1 Finance pie and add your own slices to your pie and create your own portfolio. Pie is what they call it here in M1 Finance. And if you use my link down below, you will get some free cash that you can start to use to invest to grow your money. But all right, my friends, much appreciation for watching. I hope you guys found this video motivational, encouraging, helpful. And if so, definitely smash that like button. It does help with the YouTube algorithm. That does let me know you guys do enjoy and appreciate these type of videos. And while you're down there, also don't forget to hit that subscribe button and hit the notification bell so you can stay up to date on all of our latest and upcoming video content. But all right, my friends, much appreciation for watching. But you already know I gotta keep it moving. But I'll see you in the next video. Peace.